The impact of tax planning on business strategies. I'm Loral Langemeier, the Millionaire Maker, excited to be with you. And I can tell you most business owners think that tax is some sort of an afterthought, and they use CPAs as historians. They actually hand them all their stuff at the end of the year and say, what do I owe? Versus a complete strategy that happens all year long and minimum quarterly, ideally monthly. So let's talk about why the entity structure, your corporate structure, is the vital baseline of how and why you're going to have a tax plan, a tax strategy, or just overpay tax as an invisible pain. Number two, how the tax planning changes when you hire yourself. You have the right corporate structure and you actually time the revenue and maximize deductions. So that's a big one. So you're going to probably get a pen and paper for that one. And the last thing we want to talk about is why selling your business or just laying down your business without any sort of ideas about what could be possible in a tax strategy. Most of the people who actually sell their companies by using our team's tax strategy save hundreds of thousands, if not millions. At the end of the video, I'm going to share a story about a gentleman sold a company for $11 million, and we saved him $1.7 million in tax by actually preparing way in advance of that sale. Your tax plan is an entire infrastructure of what you should be doing. So when you start a company, when I start a company, I get incorporated to the right company. Who tells me what company? Whether it's an LLC, an S Corp, a C Corp, whether the C Corp's a holding company, a management company, marketing company, if it's a limited partnership. Who tells you that? Your tax strategist. Again, most CPAs are historians. All they do is document at the end of the year and make sure your taxes are filed by April 15th. That is not how good strategy for the wealthy happens. We actually meet quarterly. We meet at the beginning of the year, January. How much money are you going to make this year? What do you want to invest in this year? Do you want to add to your 401k this year? Like, what is the plan for the year in advance of the plan? Then you start meeting on a quarterly basis. If you're making millions, you might want to start meeting on a monthly basis. And yes, you're going to pay for the strategy. So here's the real question. Are you going to pay for the strategy and keep your taxes as low as possible with a really, really streamlined plan? Or are you just going to go overpay the IRS because you don't have a plan? And some people would say you have a plan because that is your plan. You're just going to overpay because that's what you do. And tax is such an invisible pain because everyone, especially, I'm going to pick on the Wall Street Journal and USA Today. They make tax sound like the scariest thing and you just can't do it by yourself. And if you want to, you might want to go to TurboTax. And they just make it this elusively large, complex thing that you can't understand. The truth is you can understand the IRS code is on the internet, right? It is all listed out. It actually in detail tells you how to use it. Are you a tax strategist? No. Our tax strategists go to school as long as it takes for most surgeons to become a surgeon. You're not doing your surgeries. Don't do your taxes. And yes, you have to pay for your surgery. So yes, you're going to pay for strategy. Business owners who just jump into business and have no corporate structure, no tax plan, end up at the end of the year going, oh, why did I not make what I was going to make? Why did I not have any left from what I made? It's because of the lack of planning. See, there's two tax structures in the United States and actually most places in the world in principle. So in America, again, you can have an LLC, a limited partnership, S Corp, or C Corp. You can actually be an owner where you're employed by that company, or you can be an employee where you get a paycheck. It's taxed to pieces and you get to live on what's left. So there's two tax systems. You choose which one you live in. In our world, we like high income earners, especially, those who work government job. If you have a firefighter, a teacher, whatever you do in the world that you have to become and stay an employee, that doesn't preclude you from also living corporate life. So while I'm here, I actually teach a course once a month. It's the beginning, first Thursday of every month. It's called the Millionaire Intensive. So in the show notes, go grab 2 tickets. And if you want 5, call our office 775-588-9200 and come learn what it's like to make your money inside of a company. Like no one pays Loral but a company, and I get a small salary from that one company. All my money that I make is paid into a corporation, some sort of a company structure that now I get to activate all these deductions. See, most of you just make money, get taxed, and live on what's left. That's an interesting choice when you have a lot of other choices. And your business is vital that you do it right. Now, the next piece for business owners, once you pass that, say, 150, 200, 250 mark, you're going to have to get another entity. I run integrated wealth systems with 4 corporate structures, very strategically aligned, very strategically contracted to keep the tax as low as possible. So those companies can make millions. They can manage, they can control my intellectual property, which is my books, my games, all the things. And then together, there's an enormously fabulous relationship that can get designed. So it's a strategy, again, meeting minimum quarterly. I meet monthly with my team. The other thing that happens in these 2 tax structures is all you are as an employee, you file tax April 15th. When you make your money in a company's new deadline, my deadline new to you, is September 15th. So we actually close our year, say 12/31. I still haven't paid tax in 2025. I'm on an extension. September 15th I'll pay, and then on October 15th I'll pay for 2025. Then we've already got a strategy for 2026. We close the books, we go again. And we cycle that and that's the year end of wealthy people and multimillionaires. So how tax planning changes the way you hire yourself, the way the timing of the revenue, timing of the deductions is really a very comprehensive strategy and a plan with you, me, your corporate tax strategist, which typically I will hand you one on our roster, our corporate structure team, and maybe even the trust team. So that is not uncommon to get an integration of 5 people together on one phone call for you and your plan. Most business owners just go to the Secretary of State, open up whatever they think they should be opening. And I can tell you, depending on the state you live in, it matters what corporate structure you click that box. So preferably, you're not going to the Secretary of State. You're not the one clicking the box, and you're letting your tax strategist or a corporate specialist do that for you so the documents are properly done. How you pay yourself as an employee, it's an interesting formula, and I'd love for you to go to the playlist here on my YouTube channel. I teach you how to quit your job in 90 days, how to pay yourself, what do you pay yourself. And the simple formula is whatever you can't move through those corporate structures as a legal deduction. For example, your phone, your vehicle, wardrobe, if you qualify for that, meals, home, office, technology, all that stuff is corporate deductions. Hiring your kids is a corporate deduction. So then what's left that isn't deductible, 8 to 12 things typically, is what you pay personally out of your personal bank account. You reverse engineer that, and that's your number. So right now, mine's about $42,000 as a salary, and that's it. When my daughter goes back to school, it's going to drop down to $36,000. You say, well, how do you live on $3,000 a month as an employee? Because most of my life is a business deduction, and I'm in a lot of businesses, so I have a huge range of deductions. Cannot wait to teach you how to do this. It's so much fun. So if by chance you end up with an S corporation, then you've got to do very, very clear strategy on how you pay yourself. Because if you have employees, you have to give yourself compensation comparable and compatible to the industry. So it's a little more challenging when you go through an S corp, pay yourself, and then you pay your employees. There's also then the distributions that you might want to look at. So again, it's not a formula that TurboTax or H&R Block or some of these simple programs are going to do. It's someone who's way more sophisticated, understands business owners, and our tax strategists don't do a lot of 1040 EZs. They do them as they're necessary. They do corporate tax. And many of you, you'll come to us and say, why didn't my CPA, why didn't my tax person ever tell me to do these things? They probably don't know how to file taxes other than a 1040 EZ or a simple little single member LLC. So we have a lot to teach you. If you want to really understand how to be a millionaire, grab my book for free in the show notes. Read up to chapter 3, do a gap analysis. There's 8 questions that help you fill out the gap, and send it into our office. We'd love to do a one-on-one and see where your gaps are and where your pain points are. While you're here, I'd like you to subscribe to my channel. Click that notification button. So 5 days a week, a message between 5 and 10 minutes is coming into that device, educating you on what you need to do and can do, not only as a business owner, but this channel has been here for years, thousands and thousands of videos and a lot of different topics for you and your family to consume. Now, the last thing I want to talk about, which I think is vital, and it could be like a whole series of videos. If it's interesting to you, make a note in the comments so we know this is a good one for you. But how do you sell your business? So many times people get into business because you want to just make extra money. That's great. But at some point, are you going to lay it down? Are you going to sell it? Are you going to bring in some apprentice where they can eventually in 3 to 5 years take it over? But the tax strategy of that is vital. When you do a lot of those deductions inside the companies that you're running your business through, which are all legal, when you go to sell it, let's just say you put your vehicle and You have 4 kids and you and all 4 kids are employed. What if the new buyer doesn't have any kids and there's not 4 salaries or 5 salaries in there? What if there's not only a vehicle in there? So what we want to do is the core company, the base that you're selling, you want to clean it. You want it forensically clean from an accounting standpoint. So basically the business is easy to evaluate. They're not trying to sort out different cash allowances and different things you've done as a owner, which are legal to do. It's just they're not buying that part of your lifestyle that you can put through there. So there's a lot to it. We'd love to help you. I love this stuff. Most people read fiction books. I read the tax code and boring stuff like that. That seems boring to you. Last thing I want to say about selling your business is if you have a 401k in it, you're going to want to disconnect that and self-direct that into your own and keep that. The other thing that is going to become vital as you get into your tax strategy is how you invest the money that you're going to make with these businesses. You're going to grow into millions of dollars. So it's how you make it. It's how you do all your deductions, and how you invest is what's going to come up with a tax strategy for a business owner. If you have any questions, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow.